Eric Muathe with Muathe.com with my response to your question as to how we can treat this instrument here or this candidate, PBIB. It's in the banking sector, and of course you do note correctly that it is right now moving above the previous monthly closing high. So it looks like a valid candidate, breaking out there in terms of monthly price action. Looks good. Also, we can see that the RSI here is moving above to 3-year highs. RSI moving above 61.8. RSI with a chance of moving above 69.1. All these are major positives. And also looking at the MACD from a 3-year monthly chart, we can see that both MACDs are trading at 3-year highs. So pretty much we can say, yes, the stock meets the minimum requirement. Is it a buy? Is the question. Now, before we do that, I'd like to point out one of the reasons why it is even part of your watch list is because you're doing the correct thing, which is to look for stocks within the banking sector. Why? Over the last month, we've seen the banking sector, and this is the bank index breakout. So because the sector is breaking out, we can have an interest for looking for ideas within the sector. Keep in mind, general rule of thumb is 75% of your stocks move are going to be based on market direction, the general market. 15% of any stocks move tends to be from sector. Whoops. Yeah, try-typing with a mouse. Anyway, so 15% of any stocks move as a general rule is based on sector direction. So our first job is to figure out what the market might be trying to do in terms of trend, because we don't want to go against the market trend, and then find sectors that are doing the best, and within those sectors you want to find the best stock. So once you take care of the market direction and find ideas within the best sector, chances are you're getting closer and closer to owning some of the best stocks in any market environment. So here we can see the banking sector having broken out, meets the minimum requirement. As we see here, RSI jumping above 69.1. We see the MACDs moving to 3-year highs. Now keep in mind, this was one of the worst performing sectors in 2008, 2009. And here we are seeing it break out after many years, pretty much in sideways market, while the general market was in a bullish trend. And of course, if we go back and capture the period here from early 07 to this drop here in 09, this was a major bear market, if not crash period for the financial space. Now, we've had a period of an accelerated move, and I'm sorry I did not plan to discuss this, but I see it on the chart, so why waste a good chart? And here we can see that in 2012, the banking sector came back into life with this RSI moving to 3-year highs here, and the MACD moving to 3-year highs, excuse me, and the RSI doing the same thing, back to 3-year highs. There was also another breakout here, which corresponds with this MACD movement. So there was a subsequent movement here in late 2012, another monthly breakout. Talking about this monthly breakout here, the previous monthly breakout was here. All to say, they met the minimum requirement. MACDs at 3-year highs, RSI moving to 3-year highs. In fact, it was more than 3-year highs. This RSI movement was since the breakdown in 2007. So we're talking about 5 years. RSI was moving to 5-year highs at the time. MACDs were moving above zero for the first time since this drop in 2007. So a lot was taking place. Why do I bring up that minimum requirement in 2012? Because right now we are seeing the exact opposite, or not the exact opposite, but a mirror image of what happened in 2012, in that the banking sector right now, without knowing what the future brings, is breaking out on its RSI and its MACD settings, which is why we are looking at the banking sector for any type of ideas. So come back to the candidate PBIB. And now I want to discuss this one by itself as a candidate. I don't like it, and I'll tell you why. Very simply put here, take a look at this gain for the month. It lost the gain throughout this month and closed here. I don't like that action. It did something similar here. You see, it loses the gains by the end of the month here, loses all these monthly gains here. In other words, in my estimation, I think I would ignore this one just because of how ugly the chart looks. It's a lot of loss. It tends to lose, or has been losing, gains over the last 2-3 years. And so generally speaking, you want to avoid charts that I call ugly. In my opinion, if you own this stock during this run here, you would have been very frustrated. You would have been frustrated here when it lost the gains, and this move here is not good. You want stocks with consistent price action, tight, consistent, gradual gains, not up and down, up and down. So this is the monthly chart. It looks good, but if you take a look also at the 2-year weekly, you can see clearly it's not what you want to see. Here we have a period of weekly gain that lost almost all those gains, and then after this action here, it goes on a sideways to down action. We see here it gained for a couple of weeks, but ultimately closed here, losing most of the gains for that week, and then just sideways. And I don't know what this blip here is about, this weekly blip. In my opinion, even though yes, we see the RSI trading well above this level here, above 69.1 on the weekly, daily RSI trading above 69.1 also. So yes, it is doing well. But if the banking sector is breaking out, there are better candidates, stable charts that can represent a good opportunity in case the banking sector moves higher. Now, don't get me wrong, if you take a look at all data monthly for the stock PBIB, one thing you'll notice here, or I notice here, is we gotta be careful by assuming it cannot move. Now, just take a look at the behavior. Of course, the stock started trading at the wrong time in the market. 2007 was the worst time to start trading, and of course it's been suffering since then, right? One thing that we have to be sensitive here, even though the chart recently has not been good, you can see this action here not holding on to gains. Chances are it will do that again, but this time what we are looking at here is it is moving to all-time highs on the RSI, and the MACD is also moving to all-time highs. So you gotta give it a little bit of leeway. The chart is not great, but the fact that it's moving to all-time highs does alter the equation a little bit. So I would say, yeah, you can watch it. Don't give it too much weight just because of the way it's been losing gains. But given the fact that it seems to have changed its behavior with the all-time high in the RSI and also with the MACD, maybe the stock is setting up to do some different type of action and trade well, but I doubt it. Now, as we are discussing here, if you take a look at bar chart, and it's just one of the many sources online you can use to gauge sector performance, but I like the way they organize their site here. But if you go to stocks, highlight over stocks, and come here and click on industry performance. So let me show that on the chart here. So highlight the stock spot and then come here and click on industry performance. One thing you'll see, and what I've done here, I'm gonna adjust this. You see there's a 1 month performance here. It gives you the top sectors, right? And you can see that banks do show up on over the last month as being one of the best performers. So of course you can click on that. So click on the bank sector here, and it's gonna highlight the sectors, and it's gonna start with the names that are doing the best. So it's the way it's gonna weight this with the best performer. So take a look at all these individual names. This is the homework part of trading. You want to find the best sectors and then find the best stocks within the sectors. So take a look at all these individual names. Find the one that has the best look and the best feel. For example, on this list here, if you take a look at the first 3 stocks in terms of their monthly chart, you'll see they have better looking, more stable charts. And what I'm saying here, you can track this over the next couple of weeks to see whether they pull back and give you a new buy point. So let's take a look at those monthly chart. Again, we've gone to the best sectors and we're looking at the best performing stocks within the bank sector. And of course, some of these are low price stocks, but that's irrespective. What we are looking at here is how the chart looks. You can see here more stable chart during the sideways action, or the consolidation was more stable, which led to this recent spike. All right, so in terms of the chart, this one is one we can track. Take a look at this one. Had a nice rally here, held on to gains, digested the gains, broke out again. So all this meet the minimum requirement. What we need to figure out is the entry, and that's of course another lesson. And we need to see at least 1 month of rest or 2 weeks of rest. So here again, you see an example of stocks within the sector that have more stable action. Now these are for the most part low priced, not low priced, but low volume stocks. If you take a look at the bigger names within the sector, for example, if you go back to that industry performance, and what I did here, just change this to, let's say, let's go to 3 months maybe, and take a look at the sectors here. And let's see the banking sector, finance here, and banking sector pops up. We can see bank again, and even here bank. So all this banking sector are leading the market over the last 3 months. Let's take a look at the 6-month performance. Let's go 6 months and see what we get. So remember, we want sectors that have staying power. You don't want a sector that pops up for 1 week and gets lost. Here we can see that the finance space is popping up over the last 6 months as some of the best sectors. So let me show you some names that in terms of quality and also more stable, high volume names. So remember, this is where we do the work. This is where as a trader, an investor, you do need to find some time, and figure out which sectors you want to follow, what stocks you want to follow, adjust your buy points as needed. It never ends. This work of finding the best stocks in the current market, next market, is a continuous job. You do this constantly, always adjusting your candidates, removing some, adding some, changing buy points. And this, once you make a routine out of this, eventually you figure out a system that works for you. So here are some names, and you can see that we got more stable chart action. Breaking out meets the minimum requirement here in terms of RF. Same thing can be said about JPM, as long as it is holding above 69.1 on the monthly. MACDs and RSI are trading at 3-year highs, or at least one of the MACDs. These are instruments we can watch for future entries. Right now they're slightly extended. Take a look at this instrument. And here, anybody who was watching this and played this recent breakout, so let's get it. So if you play the breakout right, well, let me show that. All right, so this breakout here, once it broke out, that breakout came with the RSI moving to 3-year highs. Might explain why it's exploded, up 30% for the month so far. And you can see here that at the time, the MACDs were also moving to 3-year highs. Remember, you need only one of the MACDs, but in this particular example, you got both MACDs moving to 3-year highs. Take a look at this move with the RSI holding above 69.1 and staying also and moving above to 3-year highs. So some of these names have more liquidity. Here's one that we've been playing, continues to attempt to hold above the previous buy point. So in terms of timeliness, this one is close. Buy point, I believe, was at about $11. Needs to hold above that, and we can see that we can still continue watching this. One of the reasons why I liked it is because here RSI has a chance of moving to 3-year highs. MACDs are already trading at 3-year highs, so it does definitely meet the minimum requirement, as you can see, and continues to be on my watch list as a candidate if it can continue holding above 11. Now, of course, if it fails to hold above 11, so if it drops below this level here, then that's when you can get out of that position. But as long as it's breaking out on the monthly chart, it looks good. It's in the best, one of the best sectors. Here are other names: ENVA, RSIs, and MACDs are at 3-year highs. You just need to find the entry point there. Here's another one here that is also right now about to break out. Take a look at this instrument as compared to PBIB. You can see this one has been running actually very well over the last couple of months, going into the last couple of years, holding very well and nice steady action. All right, if you take out this blip here and also this action here, for the most part it's been trending higher. Most stable action could break out, and the breakout here also is about, let's call it about $7.10. If it can break out there, it would be a fresh monthly breakout and a buy on a breakout basis. RSI is already trading at 3-year highs, and you can see that the MACDs are already at 3-year highs. So in terms of minimum requirements, I just took a look at a couple of the stocks in the banking finance space, and these are some of the candidates. In other words, the PIB, in my opinion, based on, so your question on PIB, I would say this one for me is no. But keep looking in the sector. You're in the right space. Just find one that is breaking out right now and see what happens. It might be the best time to buy this. They could peak around here and they roll over and do nothing. We don't know that. All we know is that if an instrument is breaking out and it is in the best sector, the sector is also staging a fresh breakout, the best thing you can do is to have some representation in that space. Eric Muathe with Muathe.com. This video was supposed to be 2 minutes long, but oh well. Peace and blessings. E-A-C-S. Eric Muathe with Muathe.com, and this is the .com. This is Muathe. This is .com Muathe. What? Com. Muathe.com. Com.muathe.